Hey everybody, what's happening? Son of a silver stacker here. In today's numismatic news and information for the 4th day of November 2022, I'd like to welcome you over to APMEX so we can check out those live spot prices. However, before that, I'm going to take my time to welcome you over to Good Morning to You with Tiny Numismatics. And that's going to be at 9:30 a.m. this morning, okay? So we changed that a little bit. And that is episode number 271, so we hope to see you there this fine Friday morning. So here we go. Let's head over here to APMEX. Looks like gold is up $21.50 to $16.60.30. Silver's up 47 cents to 2018, platinum up 15.20 to 955.30, and palladium up 13.90 to 18.53 even Steven. Now let's bump over here to the United States Mint and take a quick look at their bullion sales. Okay, so it doesn't look like they've added any more since yesterday for October. Now that also means they haven't added any for November, and we probably may see some for November, but we may not. It just all depends on what the Mint is up to. Now let's head over here and go to the Google machine, and I typed in gold, and up popped up central banks bought record amount of gold in Q3 of 2022. Now this one says here, and this is Bloomberg a day ago, mystery whales baffle gold market after central bank purchases. This one here, Yahoo Finance, says central banks are buying gold at the fastest pace in 55 years. That's incredible. And here, Reuters, day before that article from Yahoo, record central bank buying lifts global gold demand, WGC says. Yikes. So let's find out what's going on there. And let's face it, you saw the price of gold here at 1660. Well, if this is really happening, all this, shouldn't the price of gold just be going gonzo right now? Because of this law right here. It says this is also Google, and I looked up supply and demand. It says the amount of a commodity available and the desire of buyers for it considered as factors in regulating price. Absolutely. That is definitely one of the biggest demands going on for any product you want to buy. All right, supply and demand. But there's something going on here, and I was having the hardest time figuring out what was going on with the gold price and why it is getting beat down when demand is just ridiculous. Fastest pace in 55 years for central banks buying gold. So why is the price of gold going down? Right? Look at this. This is from coinnews.net, by coinnews.net, November 3rd. That was just yesterday. Title of this article is Gold Logs More Than 2.5-Year Low. All right, so how could gold have a 2.5-year low if central banks are buying it up at the fastest pace in 55 years? It's just counterintuitive, isn't it? It does not make sense at all. Well, unless you look at this. It says here on Wednesday, following a 2-day monetary policy meeting, the Fed's FOMC raised the benchmark federal funds rate by 0.75 or 75 basis points for a fourth time in a row to a range between 3.75% and 4%, which actually had an impact on the precious metals market. But really, in addition to that, it had an impact on the strength of the dollar. And that's something we should definitely be considering. Now, it says here, this is numismatic news, and this is by Patrick Heller 15 hours ago. Central bank gold demand highest in 55 years. And I think this article gives a really good insight as to how the price of gold can be so low right now with demand being so high. This is just incredible. Great article. Patrick, appreciate that. High five to you. Kudos. Now, it says here, the World Gold Council this week released its gold demand trends, Q3 2022. Which you can review here, and I will leave a link in the description for all of the items we visited today. It reported that gold demand, excluding over-the-counter, that's OCT activity, was 28% higher than the third quarter of 2021. It says here, altogether, demand other than over-the-counter activity reached 45.3 million ounces for the third quarter of 2022. This is significantly higher than new mine output, okay? So that outstripped the demand, outstripped mine output, okay, and recycling and hedging supplies for the same period. The imbalance was covered by a net reduction in inventories held by gold exchange traded funds of 7.3 million ounces, which itself was partly offset by a net withdrawal of 1.1 million ounces in the over-the-counter markets. Here we go. This is important, folks. In the past decades, global central banks were often major net sellers of physical gold. As you can see from that article today, they are buying it in large quantities since 55 years. Okay, such sales suppressed the price of gold to such a degree that in September 1999, the European Central Bank and many others signed a central bank gold agreement, CBGA. The agreement limited central bank gold sales among the signatories to an average of 400 tons annually over the 5-year period of the agreement, or 12.86 million ounces. Okay, so if that move of selling suppressed the price of gold, Well, why wouldn't the supply and demand rule take over if the gold demand is, well, at a 55-year high from these central banks? All right, that's huge. So let's keep on considering this here. So several banks are secretive about their purchases, central banks, right? And sales of physical gold reserves. Some of them, especially China and Russia, have a history of announcing central bank gold purchases after delays or after days and days, right, or weeks. Now, where China did not report its purchases from 2003 through early 2009, up until April 2009. Isn't that incredible? So for years. Now, other central banks use intermediaries to purchase or sell gold reserves in order to delay reporting their transactions. Why do you think they do this? Smoke and mirrors, folks. And why don't they tell their people who live in these countries, hey, we're buying a bunch of gold. You might want to too. I mean, hey, good looking out for me. Thanks, Chief. Kind of a thing. Appreciate it, brother. Not so much. Now, in the third quarter of 2022, the central banks of Turkey and Qatar were among those identified as purchasers of physical gold reserves, even though the price of gold fell in the quarter from the previous period as measured. Here we go, folks. As measured in US dollars. That is crucial right there. Most central bank gold purchases in the quarter were made a record or near record high prices and measured in local. There you go. See? So even though the price of gold fell in measured in dollars, most central bank gold purchases in the quarter were made a record or near record high prices as measured in the local central bank currencies. There you go, folks. So we here in the United States are paying very little. In fact, we're being spoiled again. Hello, because people in other countries have to pay way more for gold and silver because of the high value of the dollar right now. This is incredible what's happening, and it should give you goosebumps. It says here, global central. If you didn't get that and you didn't understand what I was trying to say, I'm so geeked up, and I apologize if I didn't convey that. I got another article here I'm going to share with you that will convey that even probably more clearly. Clear as mud, I imagine. Now, global central banks have been net purchasers of physical gold reserves annually for more than a decade now. For central bank net purchasers to soar to a quarterly record total in the third quarter of 2022, despite high prices as measured in local currencies, there it is again, is a significant signal of the expected continued weakness of fiat paper currencies in the future, folks. So if the United States dollar is strong, all right, and it's lowering the cost for us to acquire gold and silver. However, if we go to other countries, they're paying near record or record high prices measured in their currency. So what's going to happen if the dollar loses its strength? Yeah, that's going to mean big deal for the precious metals market, I would think. Now, this is Bellevue Rare Coins, gold, silver, and jewelry. I don't know this, but I found this article, and I wanted to share it. This is huge. Now, it's dated August 30, 2022 by Austin Meadows. Title of the article is Strong U.S. Dollar, What It Means for Bullion and the Economy. And I think he did a really good job on this particular article. Really good stuff here. And I'll just scroll down to the meat and potatoes where I was shook. All right, here we go. It says here, strong dollar and gold, what it means for precious metals. It says the relationship between precious metals and the dollar is complex, but there are some common trends that are simple enough to explain. Generally speaking, a strong dollar tends to lead to declining gold and silver prices. The main reason for this decrease is in foreign. Well, let me read that. The main reason for this is a decrease in foreign demand. Now, we know that that's not happening, right? Gold is typically priced in U.S. dollars. Here we go. And the worldwide benchmark gold price is typically also in U.S. dollars. However, the vast majority of the world's citizens don't earn U.S. dollars. They earn their own money in their own country's currency. There you go. Local currencies. That's what that last article said. As such, when the value of the dollar increases, the cost of buying gold increases for foreign investors, for those people buying in their home country's currency. Okay. Now, for example, here, an investor who earns euros 1 year ago, an ounce of gold cost $14.89. Today it costs $16.59. That's 200 more euros than it did, a year ago. Now, during the same time in the United States, the dollar price of gold actually decreased from around $17.50 to $16.50, and we're at about $16.80 right now. Think about that, folks. We are getting an opportunity here in the United States to pick these metals up cheaper than our neighbors across the pond. We're being spoiled, and isn't that an advantage? Wouldn't you want to take advantage of that? Just because? It says here, in other words, for U.S. investors, gold is around 6% cheaper than it was last year. For European investors, it costs 11% more than it did last year. Ouch. This leads to decreased demand from foreign investors. I don't know about that, which leads to lower gold prices in general. More demand equals higher prices. There it is, folks. What do you think? So what's going to happen to the dollar eventually is probably, well, I would imagine, this is just a guesstimate, is that it may not be as strong as it is now with all these interest rate hikes. And if that is the case, I would imagine that the spot prices for gold, silver, platinum, and palladium bullion, and even, I would imagine, numismatic products would go through the roof. Yeah, who knew? Now let's head over to the plus ones today. My bank keeps complimenting me, telling me I have an outstanding balance. That's 10 out of 10 customer service. They're awesome over there. Now, there shall come forth a shoot from the stump of Jesse, and a branch from his roots shall bear fruit. That's Isaiah 11:1, because, well, arrogance and corruption, I think, is why we had a stump in the first place. So hopefully everybody's good to go now, and we are rocking with this one. Rocking. Speaking of rocking, let's head over here to 39's Fine, 99.9 KOIN Coin News Radio. This is Breadfan. All right. This is originally a song done by a Welsh band in the 1970s. I think it was 1973. And it's about money and the love of money. And what would you do for money? Would you spend it all so you're not a victim or a prisoner of your money? Yeah, Breadfan. Anyway, like I said, you might want to have a coffee before you listen to this morning, unless you use this as your coffee, because it is turbo. It is very high-speed music. So there it is, folks. Want to thank y'all for watching. Thanks for dropping by. Don't forget to hit that like button. Don't forget to hit that like button. And I just don't even know what I'm doing. Let me start over. Thanks for watching. Thanks for dropping by. Don't forget to hit that like button. And if you do like what you hear and see, please subscribe to the channel. It's free. Son of a Silver Stacker, out.